After owning that deal, I had decided that I want to go bigger because owning 14 units was just not ideal. Realizing that even 14 units, it's not enough in terms of economies of scale and just having enough to have representation of yourself and having more leverage.
How many units are you guys at now?
A little bit over 650.
Start with a duplex or a triplex, just start and then grow from there. And then once you do that, to your point, you literally recognize the amount of work that's required. You might as well, if you can do it, or if you need some capital, you might as well do something, 10x the size, right? 100, 200 doors. It's the same effort.
The bigger the deal, the more impactful you can do with something very little.
Hey guys, it's Marcel Droz. Welcome to another M1 Inner Circle member highlight. Today I'm joined with John Wei. John is a 20-year veteran of the finance industry, a finance degree, went into financial planning, has worked with thousands of clients, and quite a while ago just decided that real estate was the right spot for him. So first of all, John, welcome. Good to have you.
Thank you, Marcin. Really, it's my honor, and thank you for having me.
Yeah, look, it's I've been following your story. I've been seeing you go through the process and kind of just step into the world that you're living in, and you've done a ton of deals and a ton of stuff. And I thought it'd be really helpful and valuable to our audience and our listeners to kind of hear your journey. So why don't we start with the financial planning thing, because you're a CFP, you're a certified financial planner, right?
Yes, correct. To this day, I still am. Yes.
Okay, so then obviously the $1 billion question, financial planning, doing it for 20 years, thousands of clients. Like, how did and I remember I was reading your bio. You graduated from finance, right? So
Yes, correct.
when you finished the school thing, did you go right into financial planning, or how did that initially come about?
Yeah, so I actually went into financial planning right after college. Kind of knew that I wanted to be a financial planner probably sophomore, junior year in college.
Okay.
Took internships and kind of knew what I wanted to do. And so went right into financial planning after college.
Cool. And so why financial planning? I mean, some people go to school, they want to be teachers, doctors, dentists. You're like, no, financial planner. Like, what was the
It
what
was
was the thought process?
the trigger point, I think, was when I was in high school, I took internships with our family financial advisor. It was back then that I realized that that's a really cool job. It's you really get to talk to different people, different families, and help them with their financial not only investments but also just comprehensive planning. And so it was just sat behind our advisor's seat and really observed the whole process and was really intrigued by it. And that was really the start of it.
So what's interesting about your background, I mean, for context, with our business at M1, I've had multiple funds that we've launched, and a lot of those funds we actually worked with registered advisors, planners, investment advisors, all that stuff. And what I was always impressed with is the care and the diligence that a lot of these advisors took and the responsibility they felt over their clients, right? So maybe talk a little bit about that, because I mean, how do you, like, you've come across, I mean, if you work with thousands of families, you were telling me, you've seen so many different scenarios, right?
Yeah. So first thing is, I think as a certified financial planner, I think it's also another level of fiduciary responsibility that you have to take on, the level of care that you need to have to when you're serving your clients. So that part of it is always been with me, and I feel like that kind of approach is the right approach when you're trying to help clients.
You bought your first 17 unit student housing, and you did it with your money on your own, or you had partners?
Yes.
Or
Yeah, just that was by my own, because I didn't know anybody at the time, and I just wanted to, and it was my own risk, my own money, and so I just went into it by myself.
Do you still own that property today, or have you sold it?
No, I sold it. After owning 2.5 years.
Excellent. So I'm sure you learned lot about that, a lot about owning property with that one. I'm sure you could write a book entirely on that.
Oh, totally.
But what did you do after? Like, what was the next deal?
Yeah. So during owning that deal, and after owning that deal, I had decided that I want to go bigger because owning 14 units was just not ideal, in a sense that I had another full-time job, essentially managing that property, and realizing that even 14 units, it's not enough in terms of economies of scale and just having enough to have representation of yourself there.
Mhm.
Long story short was I decided that I want to go bigger and having more leverage. And And first thing was that I didn't want to invest in Atlanta, Georgia anymore because I live in Northern California. There's no direct flights to Atlanta, Georgia. So basically, I decided to get out of the Atlanta market. Basically, took the amount of money that I made from that first deal, and I basically decided to join like mentorship programs and specifically multifamily mentorship programs and coaching programs at that time, and sort of get myself elevated to the point that I'm able to do deals and partner up with other folks. I decided, actually before that, I decided that my market was Dallas Fort Worth.
Excellent. Well, you picked a great market. I mean, for now and hopefully for forever. There's
Definitely.
there's a lot of reasons to be excited about Texas. I love Texas as you probably know. So it's
Definitely. Yep,
a great
for
place
sure.
to be. So let's fast forward, and it's so funny that you're saying because it was the 14 unit building. It's everybody wants to start with 10, 20, 30, maybe 40 units because it's like you think that's safer than 100, but the truth is it's the same amount of work.
Yes, more.
You just have, if not more, and you have less money to do the actual work that's required, right?
Exactly.
So
Right.
that's like the number one mistake. People think, oh, I'm going to start small with 20 units, and I'm just like,
Exactly.
okay, I mean,
good luck to you.
Right? Good luck. I'm not going to tell you, no, you should go buy 100 units because in your mind, anything over 2 is like insane for a lot of people, right? So,
True.
and fair enough. If all you want to do is your own money, start with the 10, 20 units, make your mistakes, or start with a duplex or triplex or whatever, but just start and then grow from there. And then once you do that, to your point, you literally recognize the amount of work that's required. You might as well, if you can do it, or if you need some capital, you might as well do something, 10x the size, right? 100, 200 doors.
Exactly.
It's the same effort. It's the same weekly management meeting. It's the same negotiating with the contractor. It's the same. It's the same.
Exactly. It's actually, I mean, the amount of time that I put into managing my properties now, it's actually a lot less time compared to when I was managing that 14 unit. It's
because you have the money to hire the team to then report to you on the day-to-day operations, as opposed to a 12 unit where you can't even pay to have someone come cut the grass properly, right?
Yeah. That's right. Yeah.
So let's talk big deals then. So how many units are you guys at now?
A little bit over 650.
Excellent. Okay. And then on the larger side, are those like 100, 200 unit buildings, bigger, smaller?
So the larger side is about 150 to 200. Yep.
Okay. And is that the sweet spot that you guys want to continue to operate on, or what do you think?
For the foreseeable future, probably for the next 2 years, yes, that's the sweet spot.
Okay.
We have pretty much the equity partners and equity stack ready for those for taking down like maybe 2 of those deals a year.
Excellent. Well, hey, look, you go from 14 units to doing, even 500 doors a year. That's not a bad year.
Yeah, definitely. Yeah,
you've become a different person as well, right? Because mentally, the concept of even saying that now was like, we're going to do this. Whereas 3 years ago, you would have been like, well, 5 years ago, that would have been a different thought, right? So
yeah, definitely a mentality shift, and it's a growth path with sweat and tears.
I think what's interesting about you, John, is that you have, call it 2 decades of actual financial planning and finance experience.
Right.
And then you're able to transition those core competencies into maintaining that mindset in the context of preserving your capital, investor capital, and then looking at opportunities with that long-term outlook. Because most financial planners I know are not looking for quick bucks. They're not looking for short-term, and the ones that do don't last 20 years. They don't. They're not built for this. You're not selling cars. You're not. This is not a short-term game, right? So I think that's a really interesting, context that you have for the space. Plus, you're probably pretty useful on the underwriting side as well when you guys are actually looking at deals, right?
I am the team's underwriter, actually.
Yeah, there you go. Yeah. How did I guess?
Yeah, that's right.
Cool. So then we already discussed maybe the benefits of the larger deals with the economics because you have more money to do the work. But what are the other benefits of investing in a larger deal versus just trying to do your own deal, like a small deal?
I think it's besides economies of scale, it's also it's actually exponential. It's the bigger the deal, the more impactful you can do with something very little. It's like you're adding potentially like a dog park to the building, or adding a gym to the facility, to the property. You're actually benefiting like 150 tenants versus just 1 or 10, or and actually. And you can because of the amenities or the additional amenities, you can charge potentially more rent because of that.
Yeah.
And that's it's all exponential. I think when you go bigger.
Yeah, and I mean, to your point, what I really appreciate about the business you and I are in is, and this is applicable whether you're multifamily or storage or any of these sectors, but $1 of net income
Yeah.
on the bottom line adds anywhere between 15 potentially $20 in actual value in the asset. So
Right.
what John's saying is, for example, if you can even, let's say nominally you bump the rents $10 a month because you added an amenity that's important to people. That $10, if it flows to the bottom line, $10 times 200 units, that's $20,000 a month,
Yeah,
right?
that's right.
Pardon me, that's $2,000 a month. That's $24,000 a year.
Yeah, right.
That's net income to the bottom line. What does that mean? Well, it means that in addition to 24,000 additional cash flow, you also take that 24,000 and multiply it by a cap rate, which is
Yeah.
that, like I said, $1 of net income is 15 to $20. So that even if it's even if it's $15, I don't have my calculator in front of me, but $15 times 24,000, I mean, you're almost at $400,000 in cash. It's
Yeah.
300, and that's just from increasing the rent by $10
Exactly.
because maybe you added a basic amenity, right?
Yes.
And then you've got washer dryers and all kinds of other. So what are some of the major things that you guys have done on your projects? Are there any similarities between how you guys have added value?
So when we first started in the Class C buildings, there's quite a bit of difference. In the Class C buildings, it's more so of safety. Adding gates,
Yeah.
adding the surrounding gates to make sure that within your apartment complex, the tenants feel safe living there.
Mhm.
And so, in a lot of these like C class apartments, their location is a little suspect. So adding the security gates and adding cameras, security cameras all around the property is one of the first steps of value add that I would say that we implemented. And I think it's not really in terms of income creation, but actually in turn it is, because it provides safety. It provides a sense of a home for
Yeah.
these or more of a sense of a home for these for C-class tenants, and they actually are willing to pay more in rent. Creating that better sense of community and home is what we, I guess, for Class C buildings. Class B buildings is for us in the past is more like potentially like the package lockers. So package, setting up, like, because usually the traditional Class C buildings won't have package lockers, so tenants would just send their Amazon packages or the deliveries to the leasing office, and that takes up staff time and it takes up staff capacity. So
Yeah.
what we do is we add in package lockers, so it's a one-time expense of maybe $12,000 or $16,000, but then you can charge each tenant maybe $10 a month. That's across the board, so like 150 units. That's $1,500 a month. So just like you said, creating value there. Adding dog parks to the Class B buildings, adding soccer fields. And also just making the interior a lot better, like what we call platinum upgrades, that will garner a higher rent that you can, if you're spending the money, you can actually equivalent a higher return on the rent per units. It's lots of different things that you can, a lot of levers that you can pull on increasing the value and increasing the livelihood of the tenants that live there.
Yeah. Real estate is one of those things where if you know what you're doing, you can do extremely well. And if you don't know what you're doing, well, you and I have both probably bought properties from people who didn't know what they were doing. So, it cuts both ways. But, assuming, so John, from a planner's perspective, I think my last question for you is, from a planner's perspective, the value in having real estate in your portfolio is, it can't be overstated. But, when you're meeting with a client and you're trying to assess whether it's a fit for them to be actively involved, or pardon me, passively actively involved in real estate, so they're participating in a private opportunity, what are some of like the advantages to pursuing this from your perspective for your potential clients?
I think one of the big things is the tax benefit. And that's actually not, as a financial planner for 20 years, or at least 15 years before I got into real estate, I didn't realize that how much tax benefit there is in getting into real estate, and especially multifamily. And I would really look at, when I engage an investor now, I will actually look at, their overall financial picture if they're willing to share, and also how investing in this type of offering will benefit you on a tax perspective, on an after-tax basis, and potentially if you're investing with with retirement funds, how it will benefit you on a retirement fund basis. So both sides, I think it's overlooked by a lot of advisors. And this is definitely one of the for back a better term, I think it's a hidden secret amongst real estate investors and real estate owners.
Yeah.
And I think sharing that secret is we have to, as you know, to let the investors know that besides the income and the long term like yield or return that you get from the real estate, but you also there's some immediate and long term tax benefit to real estate investing.
Yeah, well put. And whether you're a business owner or an employee or whatever it is, there's ways to benefit from that.
Yep.
And ultimately, the tax code is written in a way where the government wants to incentivize you to do the things that they want done.
Yeah.
And obviously, more housing, more affordable housing, more sustained housing, more investment in housing is clearly part of the agenda. So again, it's not something, shady and whatever. It's literally in the tax code. Here's how they want you to make investments, and here's what they're willing to do to incentivize you to do it. So, and it's just crazy that so few financial advisors actually use that tool, because ultimately their job is to, they sell the insurance, they sell the stocks, the bonds, the mutual funds, whatever it is. But it's like they're all, mum's the word when it comes to real estate, and it's interesting. That's why I wanted to have you on this interview just to talk about this, because it is a really unique opportunity. And the fact that you yourself, as a 20-year guy in the business, call it 15 years ago, recognize that and actually, first of all, A, did it yourself, so you're not a hypocrite. And then B, figured out how to bring your clients along the journey. So that's cool. So John, if people want to get in touch, and whether new clients, existing clients, investors, partners, whatever it is, what's the best way for them to reach out?
Yeah, definitely. Two ways. One is my website, www.astuteequity.com with one E. And follow me on Instagram. My Instagram title is Multifamily Your Way. Way is WEI, my last name.
I told you before, it was very clever.
Thank you.
Excellent. Well, John, totally appreciate having you on here. You've been with us for a few months now. Have you felt like you've been growing and developing and really kind of coming into your own on that side as well?
Yeah, definitely. Thank you so much for having me, Marcin. And actually, I can't say enough good things about M1, just because I've been a part of other programs before in terms of capital raising. I think the actual benefit that I got out of M1, that I'm still going to get out of M1, it's so invaluable. And I mean, there's so much actionable items that I have taken and that I'm going to take, that it's helping me expand and actually build my business. So we can record a whole episode on that. So yeah, so thank you for that. It's really awesome.
I appreciate you saying that. We always say, if you want information, go on YouTube. If you want implementation, work with us, because ultimately the information, we're all drowning in information. You can watch hundreds of hours of content online, but how do you actually implement it in your business? And it's super cool to see you doing it, because you're literally 20 years of working with people on their finances. And it's like, you saw a gap, and then kudos for you for personally solving your own problem. And, I'm sure you've got content on how that first project went years ago, but since then you've been able to develop and obviously create quite a portfolio for yourself and your clients. So congrats on that.
Thank you so much, Marcin.
Awesome. So if anybody has any questions, please reach out to John. Of course, if you guys want to learn more about M1, the Inner Circle, reach out to us. And John, I'm looking forward to seeing you crack that first 1,000.
For sure. Thank you so much. I look forward to it as well. Thank you, Marcin.